I was just recently talking to someone about dividend growth investing and how I personally think even a dividend growth portfolio that generates a relatively small amount of dividend income can definitely be life-changing for certain investors out there. Now, what I mean by this is that even if your dividend portfolio isn't currently as built out as some other investors out there, and maybe as of right now, isn't yet earning thousands and thousands per month in dividends, I still personally think that a portfolio that earns a consistent $100, $200, $300, $1,000 in dividends on a consistent monthly basis can be life-changing for most investors out there. Now, in this video specifically, we're going to go over multiple different high-quality dividend-paying ETFs that all have the potential to pay you as an investor a significant amount of dividend income for much, much less invested. So if you would consider yourself more interested in some higher yielding cash flowing assets and want to get your dividend income up a lot faster, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first high quality, higher yielding dividend paying ETF that I personally have in my portfolio and that I think could be a great option for an investor that wants some cash flow and wants today would be SVOL, or the Simplify Volatility Premium ETFs. Heading over to the Simplify ETF website, it says SVOL Simplify Volatility Premium ETF. It then says the Simplify Volatility Premium ETF SVOL seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index or the VIX Short-Term Future Index, while also seeking to mitigate extreme volatility. They then said, we believe many traditional sources of income are failing to meet investors' needs in today's low-yield environment. But SVOL aims to provide an attractive income stream and source of diversification while seeking to avoid risks inherent in other income-producing assets. The fund's short VIX position provides investors an optimized exposure for monetizing the premium in the VIX future market. A modest option overlay budget is then deployed into VIX call options to help protect against adverse moves in the VIX. This ETF on a trailing 12-month basis is offering a 15.89% trailing 12-month dividend yield. Now, even though SVOL is sort of an alternative investment, at least in my portfolio, meaning that I would never make up the majority of my portfolio SVOL. Because SVOL pays a consistent 30 cents more or less on a monthly basis in dividends for an ETF that costs just under $23 per share. This means that an investor, in theory, if an investor wanted to earn $1,000 of extra dividend income on a monthly basis, they would need to own just 3,333 shares of it. Or an investor would, in theory, need to invest around $76,000 into SVOL in order to earn that $1,000 per month in dividends. Now, if an investor just wanted to earn $100 per month in dividends from SVOL, they would only need to invest around $7,700 into SVOL in order to receive around $100 per month in dividends, which again, relative to other investment vehicles out there, is pretty cheap. SVOL is by far one of my favorite higher yielding investment options, and we've talked about SVOL on other videos on my channel, so make sure to check those out. Another higher yielding ETF that could potentially get an investor to that $100 or even $1,000 in consistent dividend income a lot sooner would be the QQQI, the NEOS NASDAQ 100 High Income ETF. Be mistaken with SPYI, which is another income-focused ETF that NEOS offers. QQQI focuses on the NASDAQ 100. Now, digging right into it, this fund's inception date was 1/30/2024, so this fund has only been around for a matter of days at this point. But the fund strategy is pretty simple and straightforward. It says, number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the NASDAQ 100 index and implementing a data-driven call option strategy. So a lot of covered call ETFs have an underlying focus that they sort of track or reference to, or of course invest directly into. QQQI is focusing on the NASDAQ 100 and using that index to sell covered calls on, which isn't really groundbreaking or anything that crazy, but just wait, it gets better. So it says number two, actively managed by NEOS. The fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing NDX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. So what I've found great about NEOS overall since I sort of came across NEOS a while back, at least with SPYI and now QQQI, they're really trying to take a different angle, a different approach, and trying to make some of these more income-focused, cover call style focused ETFs a little bit more tax efficient, which by utilizing 1256 contracts, this ETF could have a much better tax treatment than some other similar funds out there that have a similar strategy that QQQI has. So far it seems pretty straightforward and pretty positive. By utilizing the NASDAQ 100 and implementing a data-driven cover call strategy, also along with that being very tax conscious, and of course trying to get this ETF to be the most tax efficient as possible, so far so good. But lastly, number 3, it says the fund utilizes a call option strategy that may include both sold and purchased NDX index options, which may provide the opportunity for upside capture in rising equity markets. Now, as of right now, QQQI is paying right around 59 cents per month per share. That means if an investor wanted to earn $1,000 on a monthly basis from this ETF, they would need to invest just under 1,700 shares of it. Or an investor will need to spend around $84,000 in order to receive a consistent $1,000 per month in dividends. Or of course, if an investor is just getting started out, if they want to try to receive $100 per month in dividends, an investor will need to buy around $8,500 worth of this ETF, at least going off of historical numbers, to receive that $100 per month. Another example of a higher yielding ETF, also one of my favorites that an investor could definitely utilize in order to receive a lot more dividend income a lot faster, and trust me, that's exactly what I'm doing with this one, is SPYI, or the NEOS S&P 500 High Income ETF. Now, I'm a huge fan of this ETF, and as far as higher yielding ETFs across the market, SPYI is probably one of my favorites as of right now. Now, SPYI currently has roughly a 12% trailing 12-month dividend yield, and because this ETF pays more or less 50 cents on a monthly basis, an investor would need around 2,000 shares of this ETF, $100,000 invested into SPYI, to receive around $1,000 per month in dividends. But for smaller investors out there, if they were looking to receive, let's just say $100 per month in dividends, an investor could easily spend $10,000 and more or less expect that moving forward. Now, the reason I like making videos about this, and the reason I like talking about the fact that even a portfolio that doesn't necessarily pay tens of thousands of dollars in dividends is still very, very useful. If we look through this list right here, here are some common expenses for most people. Things like groceries, things like gas, things like a car payment, car warranty, things like electricity, water, garbage, etc., etc. There's tons of different expenses on this list that if an investor builds up a dividend paying portfolio to a certain point, these things throughout their budget could be completely canceled out. Now, what I mean by this in a specific example for me, when I first started dividend growth investing years ago, I remember getting my portfolio up to a point to where I was getting paid more consistently in dividend income. And to be more specific, I think I had a cell phone bill that was around $170 per month. So when my portfolio got to a point to where at that point it was paying me more than $170 every single month moving forward, even though I personally continued to reinvest those dividends into more dividend paying stocks and ETFs, I didn't decide to actually use my dividends to pay for my cell phone bill. At that moment, I felt sort of like an unlock. I felt sort of free, knowing that at this point, if I wanted to, my dividends from the assets that I then owned could completely cover my phone bill and then some. Now, this was a super freeing feeling and just gave me a taste of what things could look like in the future, because now at this point, throughout my entire expenses, my dividends could pretty much cover everything and then some. But especially if you're a newer investor out there, if you're just getting started and you're thinking about building out a portfolio and it might not necessarily seem worth it, you might be saying to yourself, what's the point about building a dividend portfolio that's going to pay me $10 per month, $20 per month, or even like we talked about $100 or $1,000 per month? I know that every single one of us have tons of bills that we have to pay on a monthly basis, so using dividends to help pay those bills could be one potential reason to build a dividend portfolio and go all in on it today. So now that we talked about the importance of building a portfolio and hopefully building it to the size to where the dividends on a monthly basis can cover certain bills, if not hopefully all your bills in the future, and we also went through just a few specific examples of different dividend paying ETFs that could then do so, I lastly now want to hear from you guys down below. If we were to break your dividend income down on a monthly basis, what is the number one milestone? What is the number one goal that you're currently working towards as of right now for your long-term portfolio? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.